All right, this has been the week that we've been waiting for a long time now. The election coming out tomorrow night. At least some results, hopefully most, if not all, the results coming out tomorrow night. The FOMC later this week. We have a lot more earnings, pretty much wrapping up the earnings season for the majority of stocks. Nvidia still has to come. The inflation reports next week. So this isn't the end all be all this week, but this has been a week that we've been waiting for a long time. We talked about some interesting patterns that we saw going into this week on Thursday and Friday of last week in the Market Outlook video there over the weekend. We've kind of held a lot of those signals today. We'll kind of break it up. Again, there wasn't a whole lot of movement, but there was some interesting outliers. While most everything was flat, there was some outlying patterns, especially within the U.S. equity market, which sectors are rotating in one direction, which sectors are rotating in another. It doesn't necessarily match with what these signals that we saw at the end of last week, and we'll talk about whether that's a good thing or a bad thing. And then, of course, we'll take a look at the moves in the major asset classes today, and there were some relatively decent-sized moves, and see whether or not they're actually like trending type moves, or whether they're just kind of bounce back type moves. We'll talk about that as well. And our trade idea is in a very similar area of the market that we had on Friday that is just really struggling with this increase in rates. So we'll talk about how to trade that. So let's go ahead and get started. Today is Monday, November 4th, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created. If you're watching here on our blog, check out some of these other things over here on the right, including our Market Outlook live video. That's where I take a look at old trades, see whether we should stay in them or get out of them. Come down to the bottom, click this heart, it opens up this tab, hit that like button there. Same thing here, click this thumbs up icon, it opens up this tab, scroll down and click on the like button for today's Market Outlook video. Again, thank you to those who do that day in and day out. Helps get our content out to all of our followers on those platforms. Those who don't, you can do it right now while you're watching with one or two really easy clicks. Let's start off taking a look at the S&P 500 with the market forecast like we always do. As you can see, the intermediate line now has crossed below the chart's midpoint, so we have dark pink shading for the first time. We also have a red line as we are percent below the moving average. We're not that 2.5% mark, so we're not like trending to the downside, and nor is the intermediate line in the bearish territory, but still, that is the beginnings of an intermediate decline. Again, tomorrow night's results could throw all of this out the window. But going into tomorrow night, we have the beginning stages of a little bit of an intermediate decline here. Again, crossing the 2.5% threshold is really when it gets started, and we're not to that point yet, despite the fact that we have dark pink shading and a red line, and we are close to the intermediate line being in bearish territory. Looking at the Dow Jones Industrial Average, we do have dark pink shading and a red line, has for multiple days now. The intermediate line is in bearish territory. It's almost actually in the lower reversal zone. The near-term line has crossed above the intermediate line, though it remains in bearish territory as well. So a little bit of a positive there, even if, again, we're not very far below the moving average. Not nearly to the extent that would extend this beginning stages of an intermediate decline. The NASDAQ 100, its intermediate line is not in the lower half of the chart. It's barely crossed below the 60th percentile, but it has crossed below market sentiment. It has crossed out of bullish territory now. Short-term sentiment is somewhat improved. The near-term line jumping above the 20th percentile, and you're still below the moving average, but not by much. We got that bull tag last Thursday. We haven't built on that bull tag yet, so we're still doing okay there. And then finally, your Russell 2000. Like the Dow, has also been in a dark pink shading and a red line for a while. We have not built on that breakdown that we had on Thursday, similar to what we just saw in the NASDAQ. The intermediate line has fallen, but has not gotten into bearish territory yet. Has crossed below the market sentiment line out of bullish territory, and we're only just barely below the moving average today. So a little bit of an up day, but again, very small ranges. Above average range on the Russell 2000, but when you look at the S&P 500, as you can see, we're a little bit below the average, as you would expect. Again, going into a week where things are expected to be pretty crazy over the next few days. If you take a look at the weekly chart for the S&P 500, you can see the bearish candle with a red arrow means we crossed below the 10-week moving average, exponential moving average. The PPO is falling, and you can see a pretty decent sized candle there, about 1.25%, but not significant, right? Not too large of a candle. You can see that as well. In the NASDAQ, we do not have the red arrow yet. The Russell 2000, similar. We don't have the red arrow yet there either. And then your Dow Jones, we do. And this is the second bearish week for the Dow Jones, as we are kind of a week ahead on this bearishness and no longer in the upper decile of the PPO. So, and it's falling. But again, nothing too significant. You can see the size of the candle compared to the last few declines, and neither one of these, flirt even came close to the 40-week exponential moving average. Looking at the 3 green arrow, 3 red arrow chart, we still have 3 red arrows across the board on the S&P, the Dow, the Russell, the Qs. You probably will again tomorrow, as I doubt we'll get very much of a move before the market closes. All the craziness will happen after the market closes tomorrow, and then the FOMC meeting on Thursday. If you take a look at the 2-line version of this chart, again, we're still holding the 50-day. So again, the pullback really doesn't get started until you break the 50-day, and kind of like what we saw over here when we finally got the market forecast signaling that we were dropping, and that was when we broke the 50, and that's kind of like what we're seeing here. We still haven't got that yet. You are at bearish levels in the MACD. You are at bearish levels in the stochastics. You were over here as well. And we did break down one day only to come right back up immediately. So we haven't even had that breakdown yet, much less to see whether or not we bounce back up. If you take a look at some of these other oscillators, so we'll take a look at the DMI and the ADX. You can see we are above 25 on the negative directional index. We're below 20 on the positive, so your ADX is starting to rise there, though, again, nothing too major, as we're not above 30 on that negative indicator. The RSI and the CCI are still okay. They haven't broken below. We are in the lower half of the chart, so that is something to be aware of there. So if I were to look at, so technically the green box would end, doesn't go to today, it goes to, this would be the 30th of October here. So right now it's not red because we haven't broken below 40 yet, but once we do break below 40, if we break below 40, then this is the day that we would start the red box, and so we're not there yet. This is still okay. The CCI, remember, it doesn't stop being green until we break below minus 100 on the weekly chart, and we're not even below 0 yet, so that's not an issue there yet, at least. Looking at the Ichimoku cloud, again, we are below the blue line, so we have lost the mature bullish trend, which typically leads to an intermediate decline. If you can see, we are barely below the S&P. The 26-day rate of change is barely negative, so again, nothing too major there yet. And we don't even have, and we're still above the cloud. We do not even have a weak bearish trend, not even close to a weak bearish trend. So nothing too concerning there. And then looking at the Bollinger Bands and the Keltner channels, we are in the lowest quartile of the bandwidth. We did not break below the lower band yet, as you would expect at some point we would, either to the upside or the downside, because the bandwidth is so low. And the bandwidth is not only really small relative to its 150-day range, but it's also inside the Keltner channels. The momentum has shifted to the downside, but we don't have the green dots yet that would again signal the beginnings of a bearish trend. But there's plenty of signals out there that suggest that we are leaning in that direction, as we've seen over the past couple of days, last Thursday and last Friday. Let's take a look at the intraday chart. Again, lower high, lower low, closed below Friday's low point, still above last week's low, and you can see we did get a jump to 100. So this move here is the new low point because this day has come off, and so the low has moved up to today's low. So we have got our bearish crossover. We're getting another signal, even with the channel about as low as it possibly can be. So again, we are set up for going into this period of uncertainty, at least, period of question marks over the next couple of days, next few days, going into it with some, these bearish signals that that have us leaning in the bearish direction because of them. Again, not that I think the market's going to tank, but just that we might be in the beginning stages of what may be, kind of a typical 5% move to the downside, and nothing really even more than that. Now that we're at, about 2.6% there. If you take a look at today's range and volumes, it's not going to be surprising to see that we are below average on the range at 4.6 points, or a little bit below average in the volume, though that volume is really low, right? So it's one thing to be below average on the volume when the volume's up at a higher level relative to its 52-week range, but we are so extremely low on the volume relative to its 52-week range. So being just a little bit below the average is really, really low because of how extremely low the average is. And you can see we're flirting with getting back above the 1% mark, though we're not quite there on that normalized ATR. Finally, the VIX, not surprisingly, is still elevated. You're still right around 22. You're still above the 100% mark, and the VVIX is still well above 110. So, not surprising that, again, with the question marks we have this week, that volatility is pricing in the potential for some dramatic weakness. The question will be whether or not the skew stays elevated. And if you take a look at the skew, it was at 153 last week. It has fallen to below 150 today. So that's a good sign. We like to see that skew come out. Usually that precedes the VIX dropping too. So once we can get the skew to fall, now granted, if it falls too much, again being below, and you can see it's been updated now, when it's below the moving average like this, then that generally is bearish, right? It's bullish for the skew to get above a rising moving average. That's generally bullish for equities, and so we've been at such extremes, but now in the volume, the average at extreme, so it doesn't take much to get below the average, and that's why we're seeing the weakness showing up here. One other thing to see when we didn't look at the when we looked at the intraday chart, you can see again we are still easily in bearish levels, and the average is falling again. Another sign of intermediate decline here. All right, now let's take a look at what's driving this price action. Take a look at the asset class comparison chart here, and you can see gold and bond yields, interestingly enough, remain the best performers over the past 3 months. But if you look at just today alone, so let's pop down to just today here. A very quiet day. Everything is kind of in very small ranges except for these three asset classes. Real estate breaking out here at the very end of the day, up over 1%. Bonds were up over 1.5%, and commodities were up over 1.5%, with very significant weakness in the dollar. That's a big change from what we've been seeing here lately. Again, the dollar has been showing strength, but now kind of breaking down below the 8-day moving average again, especially after a big jump higher. The MACD is negative, the stochastic is still above the 17-day, but you can kind of see at best we're in like some significant convergence zone. But TLT was a big time mover. You can see not a big mover throughout the day, but it gapped up so much and then just stayed up after a big drop on Friday. If you take a look at the 10-year yield and what that looks like, here, let's go to, let's see here. We'll go to this chart here and we'll look at the 10-year yield on this chart. Let's go to, I picked the wrong one. Let's see, it's right here. There we go. Let's do 10-year yield again. You can see down, but off of its lows and off of the open, still at 4.3%, still above moving averages. And as was mentioned, gold was up today, and you can kind of see it's been such a big mover and still holding its value over this period of time. Commodities made a big jump to the upside, over 1.5%, again after a big down day. So these kind of big moves that we saw on Friday were kind of reversed today, reversed back to the upside and back to where they had been going. So commodities appear to be trending back up to the upside, kind of slowly rotating up to the upside. TLT looks like it's trying to start to base at least and make a move back up to the upside as well. The dollar index made a big jump up and now is continuing its convergence. So you can see how they're all kind of just reversing that big Friday move If you look at like what's driving, let's take a look at the breadth here first. If you take a look at the breadth and money flow, you can see the breadth remains negative as we are continuing to work our way down below 500 now. If you take a look at the money flow as well, it's kind of another factor here. Obviously has been in decline. It's still at least out of bearish territory, though it's in the lower half of the chart, but that's okay. We can come off of these kind of lows. So that's working okay. Let's take a look at some of the other indicators. We look at that kind of measure breadth. Big drop on the new lows, and I think it's been updated. Let's check here really quick. We have 64 new lows and 64 new highs. So they're kind of even there, just below the level that you need. 72 is the level for the McClellan, the Hindenburg-Ullman. So this will probably jump back up here. It's up 40, so it's going to kind of come up here in this area. And if you take a look at the new highs for the New York Stock Exchange, again, they're still really, really low. And this is a significant sign of weakness when that starts to drop there. The number of stocks above, let's take a look at the number of stocks above the 50-day moving average, still below 250, but just barely. The number of stocks above the 200-day moving average also down below their moving average. That's currently falling. That's keeping this elevated, right? When this is elevated, it's not necessarily the most bullish pattern. You like to see it come back down and start to drop again. The stocks get back above their 50-day moving average, and over the last couple of days of and really including today, because this includes the NASDAQ composite as well, we've been negative. Now, we haven't broken below the minus 100 level, but we've been negative here. So again, below the moving average, that's falling, below zero. So significant signs of weakness and breadth. Again, not surprising, right, as we're heading into a significant question mark event tomorrow night, after the market closes tomorrow. If you take a look at the sectors and how they moved here, again, you can look at the big drop in utilities that we've seen over the past few days. We talked about that on Friday, in Friday's market outlook video, because that's where our trade was. And you'll see here in a minute, that's where our trade's going to be for today as well, but it's down quite a bit. Energy is up, real estate is up, everything else really flat. A little bit of down weakness in healthcare and financials, but really everything is flat. Again, when you look at when the market kind of peaked here and started to show some signs of weakness. So if I were to come back to the market forecast chart, give it a second. There we go. So you can see when we really started to show some weakness, really coming out of the expiration date. So starting on the 21st of October, if I were to zoom out on this and go back to that first week. So it's been about 2 weeks now. This is the last 2 weeks. Again, the S&P is down 2%. Technology leading it down, but look at utilities and real estate. Very interest rate sensitive areas also down pretty significantly there. And that's a really important thing for us. Remember, we watch very closely how technology is trading relative to the rest of the market, right? And if I were to bring these up, I'll bring this up here too while we're waiting. There we go. It should be popping up here in just a second. So you can see how technology, remember, breaking that 17-day exponential moving average is not something any of us want to see, especially with trading below the 50-day moving average relative to the ratio relative to the S&P is trading below its 50-day moving average. This changes to a daily chart on the 1 year, and you can see, breaking, we're below the 200-day moving average. We've been flirting with that 50. We're kind of still holding slightly up above it, as you can see down here. This is a weekly chart. Let me zoom out to the daily, or zoom in, to the daily on this one as well. All right, flirting with that 50-day. We are rotating out of favor. As utilities and real estate, and again, interest rate sensitive areas like these do better when interest rates are falling. So you can see interest rates aren't necessarily rising like today, but they have been. They've really put pressure on these areas. Staples and healthcare also. So these are all these safety trades all moving down to the left at pretty sharp paces. Technology is not necessarily in the improving category. Or not necessarily in the leading category because its momentum is below 100. But you can kind of see it's trying to get there. Discretionary is there, and communication services moved up. So even though the market has been showing weakness with weak breadth, part of the reason why the breadth is weak is because we're moving back into these mega cap names. They are again acting as safety trades, and if the market is going to rally post-election, which I think the consensus is that we should rally post-election, that's going to be the area of the market that leads us higher, and so we want to continue to see, a breakout back up above the 17-day moving average. Sorry, this is on the daily chart. The weekly hadn't broken below 17, but the daily had last week. When you get back above these moving averages, get back above the ratio, get back above its moving averages, ideally back above the 200-day. Breadth won't be great, but it doesn't have to be, as long as the sectors that we want to lead the markets are leading the markets. All right, let's go ahead and take a look at our trade idea of the day. It continues to be in the trade in the utility sector, Southern, which had its earnings announcement a couple of days, or last Thursday, a couple of sessions ago. Broke down yesterday, continued that breakdown, so really building on that vol tag, got dark pink shading and a red line, almost actually has a cluster. You're only a half a percentage point away there on the intermediate line from having a cluster. Very bearish short-term sentiment. The near-term and momentum line, you can see we are in the 10th percentile now, down to the 5th percentile, so really kind of breaking down here. Way more bullish than we were even over here, and we'll show you that here in just a second. So it's a bigger breakdown than what we've seen before. Here's Southern on its weekly chart. And you can see, again, very significant. That's what I'm saying. We are more bullish now than we were over here at the beginning of the year because of how strongly bullish we are here. Outside of the upper decile, barely, excuse me, but falling with a significantly bearish weekly candle here. More bearish than what we've seen in a while. Breaking the 10-week moving average. And obviously closing near last week's low point that had the red arrow up there. If you look at the 3 green arrow chart, we obviously have 3 red arrows. Have had 3 red arrows now, except for the day of earnings. But pretty decent volume on these days. Not as much today, but that obviously makes sense. You're not going to have a lot of volume every day, but look how big the gap is between the 50 and 200-day moving averages. So very wide gap, again, bigger than what we saw at the beginning of the year when it had its weakness there, and it didn't really fall very much. Breaking below the volume node that we have up here at the top, working its way potentially down to the next volume node inside the value area at the 200-day moving average. MACD and stochastics obviously bearish. Now you're going to see a bunch of bearish candles here, or bearish patterns in the rest of these oscillators. You're not quite above 30 yet on the positive indicator, but you are now below 25 on the negative. Remember, that was kind of a pad because of how high the ADX already is. That was something that we were missing on Friday's market outlook trade. If you take a look at the RSI and the CCI, you can see we are below 40 on the RSI and well below minus 150 on the CCI. Looking at the Ichimoku cloud and the trend strength indicators, you can see we are into the cloud, the green line. We have lost the bullish trend that we had. The rate of change is negative, and the green line is crossing the blue line. So getting to be more and more bearish there as the cloud itself is shrinking. And then finally looking at the Bollinger Bands and the Keltner channels, you can see that we are pushing down against the lower bandwidth and the lowest quartile. The bandwidth is rising at a pretty decently high level, and we're flirting with that lower Keltner channel as the momentum has just barely turned negative today. So I like the setup for this, especially with how wide that gap is. So I'm going to come over here, and I'm going to come over to, see we have a trade on in our directional option strategies that will be closing here. But if you come to the market outlook, we're going to come and sell the 20 delta. So sell that 82.5, buy the 85. You can see we're getting about 65 cents. So let's move this down to 65. We're position sizing for our normal position size, $500. Gives me some flexibility for timing up here and about a 3-to-1 reward to risk ratio if it works out. So let's hit confirm and send that into our market outlook category. All right, well, that does it for today. You've heard from me now. I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread. Let's keep this conversation going in between videos. Again, thank you very much for watching. Remember, subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at marketscholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all tomorrow.